Hi all, I am Sham. I have Dr. Tejas. Welcome to the first crypto night of this year. So here we discuss all things that happened in crypto over the last month or so. So Dr. Tejasvi, do you want to take us away? Like what's going on with the price of Bitcoin?
Hey, everybody. Welcome to 2025. It's perfect square, apparently. 45 times 45. And for Sham and I, 45, the number also makes a big difference. But let's not get into that part right now. Anyways, given all of that, what's happening with Bitcoin? So, Bitcoin has been, I think, after the Trump rally, late November and maybe early December, it's been kind of going sideways for the last many days, almost a month, I would say. Kind of going around the $95,000 to the $100,000, I would say, band. This is not new. Bitcoin has done this many times before, where it kind of reaches an all-time high and then kind of goes sideways for many days. In fact, a couple of years sometimes. So there is the famous 58,000 gang, which is like this Twitter meme where people kind of used to hang out at around 58,000 for a long time, and similarly the 95,000 kind of has become the new 58,000, if you want to think of it that way. Also there is this bunch of analysis around when Bitcoin kind of maxes out and then kind of hangs around in that max area. What happens to altcoins? What happens to Ethereum? What happens to Solana? What happens to the rest of the downstream altcoins with much lower market caps than Bitcoin and Ethereum, for example? So there is this whole so-called altcoin thesis, which is fairly well known in the crypto trading community, where kind of Bitcoin maxes out and then kind of hangs around there. What happens is most retail people believe that they missed the Bitcoin rally because it's already at all-time high, and 100,000 seems crazy. Why not buy something else at cheaper, right? There is also unit bias, where people look at Ripple, which is at $2, or you look at Solana, which is $190, or you look at, I think, something else which is even cheaper, like less than $1, right? You have something at 10 cents or whatever it is. So you kind of have the unit bias, then you have the feeling that the rest of crypto will catch up with Bitcoin at some level. And this has played out many times in the past, at least two cycles. In the 2001 to 2000, sorry, 2011, sorry, 2021-22 cycle, 2017-18 cycle, it's happened before. So this altcoin thesis says that after Bitcoin has kind of maxed out and is going choppy sideways, you have a bunch of action in the altcoin and lower tail coin ecosystem, so to speak. So people believe it will happen. Some people say that it's kind of more likely now this year that you will see a rally in a lot of other coins. I don't know. I do not have any sort of market trend insights of this type. I am kind of mostly following crypto from the technology slash meta analysis slash philosophical standpoint. I don't really look at the price action in that sense. I don't follow previous cycles that closely, but I know people who do. I have close friends who kind of follow this pretty religiously, and they believe the altcoin thesis fairly strongly. So this is definitely gonna be something to watch out for. So if people are interested in trading crypto in the short run, and when I say short run, I mean like in terms of few months, right? Not for the long haul, not for multiple years. But if you want to trade something for the next month, couple of months, 6 months, 5 months, I would say the altcoin thesis is somewhat reasonable. If you go around and look for the altcoin cycle followed by Bitcoin cycle or something on PT or something, you will find a bunch of these historic analysis about this. When Bitcoin maxes out, what happens to altcoins? That's the question you should be asking. And there is definitely a bunch of ideas around this.
Right. So for a brief while, everybody's attention was on Fartcoin, and that damn thing kept on rallying, and at one time it was like 10x the market cap of Lockheed Martin or something like that. So the joke was, one produces the fart, and
Yeah, no. So Fartcoin, Goat. I don't know whether you saw the Goat coin. Goat was also like a bit of a, oh, this is not safe for work, so to speak. So Goat is the first, I would say, the kind of the main AI meme coin, so to speak. Fartcoin also is supposedly an AI meme coin. I really don't know how Fartcoin is related with AI, but it is apparently. Along with, there is a bunch of other AI meme coins which are going on pretty strong these days. The big one is AI XPT. Then there is AI 16Z. There is Cookie. There is Fartcoin. There is I don't know, Chain GPT. There's a few others of that type. The critical thing here is whenever they get a big exchange listing. So let's say you know that say Cookie coin is going to get listed on Binance in the next few days. How that will kind of happen is Binance will kind of open up Cookie deposits. Like they will want to get some Cookie from retail users, from institutional users, from people who have the Cookie coin, and they will open up the deposits. Sometimes it is private. You don't really hear about it. Sometimes you hear about it. And once you know that Binance is collecting some Cookie to do like their own kind of listing, and of course they will talk to market makers. They will make sure that there is enough market makers on the back end on Binance side that they will have enough Cookie supply. That's when you know that Cookie is going to get listed, and that's when you kind of try to front run that particular event. And then when you front run that event, you basically accumulate Cookie before the listing happens. The listing happens, a bunch of retail users who are using Binance kind of will try to buy the coin, and then you kind of unload on them, and then you make the money. So AI coins getting listed on Binance is a huge, I would say, momentum driver for these AI coins. Anyway, so coming back to Fartcoin again is similar. Goat is similar. Goat is basically, it's funny because Goat started off as a original meme in the 1990s when internet was like the first kind of in its infancy, so to speak. So the Goat meme is basically there is this guy who, for the lack of a better word, shows off like one of his private parts in a very, I would say, grotesque way, and that became the meme. It's called Goatse, Goatse. Don't Google for it. Definitely don't Google for that word. If you Google for that word and do image search or whatever in safe mode turned off, you will be really in for a shock. It is really like an offensive image, and that is coming from somebody who doesn't get offended at internet vulgarity, so to speak. Anyways, so Goatse was the original internet meme, and somebody kind of made a meme on that on some blockchain in the late 2024. And that became a big deal. So Goat is a big AI meme coin for unknown reasons, along with Fartcoin, which is also like there. But I would say AI XBT and Cookie and Chain GPT and all these other coins, some of them were created on this platform called Virtuals. So Virtuals is this platform for creating AI agents. So they will give you like a full SDK with support for Twitter integration, Discord integration, like a Python bot connection to ChatGPT or Anthropic or any of the APIs. They will kind of basically handhold you into creating a token in a nice way. So Virtuals is a token creation platform, so to speak. If people have been following the crypto universe last year, you would have heard of Pump.fun. So Pump.fun was a platform to create meme coins. It doesn't take much, but still you need some handholding if you are completely new to this. And Virtuals is a similar way to create an AI coin. And the AI coin basically will come with an AI bot, will come with native Twitter integration where it will keep writing on Twitter, it will reply to Twitter posts, it will try to make viral content. And Virtuals, of course, is trying to do more. They will want to do AI agents, which are actually more than just writing on Twitter. They will try to book tickets or do other things in the real world. That's, I think, their future plan. But all these coins, some of them were created by Virtuals platform. And AIXBT is probably the biggest one. Its market cap is around 600 million right now, which is fairly high. Virtuals itself has a token, which is also like fairly highly valued. So this AI crypto meta is kind of taking over completely right now. People who front ran this or who were early on this have made a lot of money. People who are purists in the AI kind of world are amazed and cannot believe that this can generate so much money. They've been just kind of chugging along, trying to write some Web2 app using some AI thing and doing an AI startup, trying to raise venture capital or whatever, and really struggling. But AI meme coins are kind of going through the roof. And this is, again, all things crypto, gambling coming together. So I would not, like, the purist in me will say that if you are an entrepreneur or if you are like a person who believes in AI in the long run, you do what you are kind of planning to do. Don't get distracted by the AI meme coin madness, because there is money here. The money is only like luck based, front running based. You need to be in the trenches, kind of figuring out what the trends are, which is like a full-time job by itself. And the trends keep changing. Last year it was meme coins, now it's AI. Tomorrow it will be DeSci or decentralized science or something else. You don't know what the next crypto meta will be. Meta basically is that the kind of the meta trend around crypto. Crypto keeps moving from trend to trend like this. So I would say AI is the current trend, and people have made money, but that doesn't kind of take away from Web2 people who are trying to build AI startups. So I would kind of keep those two separate.
Right. So, it is sort of interesting in the sense there are a lot of people locked out of crypto because of regulations, especially in India and so forth. Um, and it's not just regulation; it's the tax treatment of these things. Now, if you look at the way some of these new platforms have come, like it's not exactly decentralized exchanges, but it's like a cross between a DEX and a SEX, right? So one of that is like Hyperliquid, which I think we discussed yesterday. But since then, a lot of similar platforms have come up, right? So they know that the traditional DeFi like concept where you have to do everything yourself is like a huge barrier to entry. So what they've done is they've given a Web2 API, right, which in turn talks to whatever the L2 chain or whatever it is in the background. So it is DeFi but with an API, right? So I'm not. So I think a parallel can be drawn from that to like launching your AI idea on virtuals or whatever other platform there might be, because what have you got to lose, right? If you have an idea, go try it out, and if it is fun and easy to use, you'll end up making a bit of money. So what's the harm in that? So if you're kind of early in your career, or if you're a college kid, I think this is an excellent way of kind of showing off your
De-
capabilities as well.
Definitely, I would actually say the virtual slash AI meta is far more reasonable than the meme coin meta. Like meme coins are really, I would say, at some level nihilistic, right? There is really nothing there. You could argue that the social meme of being together, of cultural unity, and all that is a thing. Maybe there is something there, but literally there is no utility in some sense. It's absolutely no utility. It's mostly like a feel good vibe thing. But AI meme coins or AI coins, so to speak, powered by virtuals or powered by other platforms which are similar, uh, they are somewhat more meaningful. And you could actually have a real AI agent which actually does something non-trivial. Uh, and it could be protected as a thing as well, because what I mean by thing is you can protect it from your IP standpoint. You don't have to open source all the magic that goes on in the backend. So you, for example, let's say you are calling some open source model, let's say DeepSeek V3 or Llama 70p or whatever it is. On top of that, let's say you've done some work on pre-training, or you have done some feature extraction which is non-trivial, or you have some custom data that is that you have access to somehow, and you've done some magic in the backend. The AI agent could be entirely Web2 based backend agent, but you could have a crypto component where the the proceeds of the agent will accrue value to a token or whatever it is. So you're trying to kind of spread the richness of the project to like a bunch of community members who are part of your kind of larger community, and then that bootstraps the wealth effect in some sense, where people who are early on to you feel that they have kind of gotten something from you, and they will have kind of incentive to spread your message in some sense. And so you get marketing, word of mouth, a bunch of early community members who are diehard fans of what you have built, and then you keep some of the proceeds yourself because you can control the token supply and other things yourself. So it is it's a kind of a bootstrapped way of doing something interesting. Of course, you could argue that this lends itself very easy for bad operators to come in and fake the whole thing and sucker in a bunch of retail users who will just buy the token expecting something good, but nothing happens. This is exactly what has happened in the real world, where people have done good companies like Google or whatever, and scammy companies like things that the Wolf of Wall Street was selling, right? So there is like a whole range of things here, and that's how it's going to be. Right now, it's unregulated, it's Wild West, so you will have to be careful. You'll have to do your own research. You'll have to do your own digging to see if there is a real project behind it. Otherwise, the ideas remain the same. Ideas of creating products and companies around this new technology remain the same, and that's a good thing.
Right. And see, even in Web 2, there's plenty of fraud to go around, right? So it's not like just because there are regulators and policemen doesn't mean crime doesn't happen. So question is really, what recourse do you have? And I would argue that in places like India, even though there are law enforcement technically, usually people don't have a recourse, right? So what are they going to lose? So it's kind of like a full circle in some sense. um, Speaking about regulations and fraud, you've written a note about MSTR, right? So this whole MicroStrategy guy, what's his name?
Michael
um,
Saylor.
Michael Saylor. So he's been behind Bitcoin for the better part of a decade now, right? So
No,
he's
no, no, actually not a decade, I would say. Just to correct you here, I mean, he's been, I think he came into public prominence in the COVID time around 2020 when he first bought a bunch of Bitcoin from his corporate account. Before that, I don't think he was into Bitcoin as much. But either way,
okay.
he's been very vocal for the last 5 years. So you have half of that right.
Right. So he's kind of like bet his entire company on on the price of Bitcoin. And there are multiple reasons why that is both scary and interesting. So it's scary because this is nothing but like trying to corner the market, right? So I think we've discussed Hunt Brothers, in previous episodes. So they try to corner the silver market, and the problem is that even though silver is precious, there is no real shortage of silver. It's when you mine for copper or something, you get silver along with it. um, and ultimately it's a law of supply and demand. Silver is an industrial metal, so if there is a recession or a slowdown in the economy, silver prices are going to tank. So there is a certain amount of logic that can be applied to why silver should trade somewhere. And But the thing about Bitcoin is that everybody knows the total supply, right? The total supply is fixed. So when you know the total supply is fixed, and you go on this buying spree, right, trying to corner the market, um, I think at this point he owns what, like 40% of the Bitcoin out there,
No, no,
or
no, 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 no. He owns way lesser. He owns, I think,
okay,
less than, I would say less than 1.5%, maybe 1%. I'm not sure exactly. So it's around the
okay,
1 to 2 mark, somewhere there, because he owns around, I think, 400,000 Bitcoin. So 400,000 Bitcoin
huh,
would be 21 million. So that would be around, I would say around 2%, maybe, or 1.5%, thereabouts.
okay, so I was mistaken on the actual number, because maybe I got confused between that 400,000 versus
Yeah, 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 yeah,
40%. So
yeah, yeah, yeah,
my
yeah.
bad.
It's around 400,000.
Um,
I think if you look at it, the number of people who own more Bitcoin than Michael Saylor would be. So Satoshi personally owns, or at least is rumored to own, around 1 million Bitcoin, which is kind of locked supply. We imagine that it's not going to come back to the world. So that's one. Then there is the ETFs. So BlackRock ETF, Fidelity, Bitwise. There's a whole bunch of them. They're all controlling around, I think, around 600,000 Bitcoin, if I'm not wrong. And that is, interestingly enough, not custodied by them. So they don't own the private keys. I think they're custodied mostly by Coinbase, which is interesting because even MicroStrategy, though they own 400,000 Bitcoin, the custody is, I think, predominantly powered by Coinbase, if I'm not wrong. We don't know this. It's not public information, I think. But there is a rumor that Coinbase custodies most of MicroStrategy's Bitcoin as well. So if you think about it, Coinbase is actually a very valid and important actor here, because they actually control the supply, or not the supply. They control the private keys of this particular big stack of Bitcoin. They could theoretically be an actor in the sense that the government of US could compel them to do certain things with it. We don't know for sure how it will play out. Those things are still way off in the future, where the government really believes that Bitcoin is a threat to US dollar or whatever, which is, I think, not the case right now. So for now, I think Satoshi, Michael Saylor, and the ETFs together probably control around 7% of the supply, who are the real whales in some sense. But my contention here is that after that, the tail is so fat and so long that it's actually pretty hard to control who are the sellers here. Because even MicroStrategy, when it was buying billions of dollars worth of Bitcoin, they were able to do it without moving the price much. And even the big sales that have happened have not moved the price that much. So, like for example, the US, the German government dumped a bunch of Bitcoin, I think 4 months ago or 5 months ago. They missed the rally, obviously, which is a kind of a weird separate thing. But let's assume that they are not interested in making money from the Bitcoin. They dumped a bunch of Bitcoin. The price did not move that much. Right now, the US government has access to the Silk Road Bitcoins, which is approximately around $7 billion worth, which they plan to sell apparently. Again, a lot of people are not worried about it. They say, yeah, the market will absorb it. Bitcoin is probably one of the more liquid markets out there with a lot of volume. And it's very difficult to like really move the price with even billions of dollars of purchases. So at some level, I think MicroStrategy can do whatever it wants. There is definitely an angle that MicroStrategy will have some say in how Bitcoin operates in the future. I think that is a bigger risk that I am worried about. I'm not worried about the price impact as much as I'm worried about the fact that Bitcoin's nature itself is not like silver or gold, where you cannot really change the way silver works. Silver is what silver is, but Bitcoin is not what Bitcoin. Bitcoin can change. Bitcoin's fundamental nature is a social construct, and that social construct can be influenced by the likes of BlackRock, Michael Saylor, US government, Bitcoin developers, Bitcoin cultural influential people, whoever they are, right? So I think that part is something that is still, I would say, not set in stone. It'll be unlikely to be set in stone. It's always going to be something that is, Bitcoin is very different from gold and silver because its nature is not physics based. Its nature is a social construct, and we should always be worried about it. If you're a believer in Bitcoin like I am, I'm always worried about it. I'm always thinking about it. It is not set in stone. So it's the fact that Michael Saylor is a big actor in the Bitcoin ecosystem worries me a little bit, to be honest with you.
Right. So part of there were a couple of articles around what is powering this guy's buying spree. Like, why is Wall Street so willing to kind of accept the stock issuance and give him money? And it turns out that it's mostly driven by convertible arbitrage guys who kind of trade the volatility between the stock and the bonds and the convertibles that he's issuing. So they are more than willing to accept this new issuance and kind of roll with it. So it is sort of a weird, I think, market corner as far as Bitcoin is concerned. And I would be more worried about people who gamble on, like, they have issued like 3x MSTR and like leveraged MSTR and inverse leveraged MSTR ETFs. So I would be more worried about the mental state of people who trade that, you know, rather than MSTR itself. So
I mean, MSTR itself
uh,
is like a 3x or 2x levered Bitcoin in some sense. Like MSTR went down, I would say 20% when Bitcoin went down by 2% or something. So there is a bit of a weirdness going on with MSTR itself as a equity. Like Bitcoin went up like what 100 and 200% this year or last year. MSTR went up like 480% or something. So MSTR itself is like a bit of a leverage play because of the convertible note backing some of the buys. But I don't really understand all of it because he's also issuing stock. He's also issuing convertible notes. He's also doing, so he comes on a bunch of podcasts and talks about it in a very authoritative way where he says that he's allowing people to trade the volatility, which is the main product apparently, which I don't really understand what that means. So I am a bit out of my depth here in terms of why MicroStrategy is a deal, is a thing. Like what I mean by that is why MicroStrategy trades out of sync with its Bitcoin holdings is a bit of a like there is a bunch of factors which contribute to that. I don't really understand many of them. So for me, it's a bit of a unknown in some sense.
So I think the root of it is the leverage, in his capital structure, right? So imagine if you just have Bitcoin and it goes up 1 or 2%, and there's no leverage, then that's all you're looking at. Now, sure, you can trade options on that movement, but it is still kind of anchored by the volatility of the actual product. Whereas if you look at MSTR, because of his capital structure, and there's a bunch of cash coming in from his legacy business as well. And there is a leverage component to it. So I don't know what exactly it is, but there is leverage. So when you combine all this, it introduces a certain amount of I would say uncertainty. So it's not a one is to one mapping between the price of Bitcoin and the volatility of the stock. And what this does is when you trade options on top of it, right? So it's like extremely juiced. So I would say exciting to trade options on,
Yeah, I'm sure it is, and
compared to just putting it
people are
on
going
futures.
crazy. Yeah, people are going crazy over it. I know there is a Twitter account called Irresponsibly Long MSTR or something. This I forget what it's called, which actually talks about this quite a bit, and there is a lot of noise around it. There is a subreddit tracking it. It's like a Wall Street bets, but like in a smaller community, but it's more vocal and more animated, so to speak. So it's a big deal, and I'm kind of following it on the side, but it is way too noisy and way too complicated for me to understand.
Right. And in a way, even if they go bust, it's not going to make much of a difference to anybody. It'll be like met with a collective shrug, and they'll be like, ah, yeah, another idiot. So move on.
That's what I'm hoping. That's what I'm hoping will happen. Because Michael Saylor, for all his bravado in terms of buying Bitcoin, throwing the 100K Bitcoin party in Miami, uh, being the so-called adult in the Bitcoin ecosystem or whatever it is, he has never given me an impression of being really smart about it. He has made many statements which are antithetical to the Bitcoin's true nature. He's not impressed me from a fundamental. He talks about being an aerospace engineer from MIT or whatever it is. All of that seems a bit of a like bragging and kind of empty at some level. So I would say good for him. He's got the gall and the balls to go along in a fundamental way, put himself out there and show it. Good, happy. There are cowboys out there, but I am not looking at him as any sort of a messiah or a hero or whatever it is. He's just an actor, and for me, anybody who becomes larger than life in this community, I get a bit scared, and that is
Right.
I think that's one of the reasons why we are all happy that Satoshi is not there, because Satoshi has the potential to become larger than life in this community, and because he's not there, it's not a thing. So anybody who kind of even micro in a micro level goes towards there, which is an interesting pun, MicroStrategy. But I would be scared.
Right. So speaking about larger than life, so there's a lot of noise being made about quantum computing risk uh, to Bitcoin, but it sounds like it's far, far, far away from
Yes, it is. It is far, far away. I mean, I really got annoyed about this. Uh, I think I'll take this platform as a way to ramble a little bit about this. Let just humor me a little bit here. For me, quantum computing is like one of those things where people have been promising stuff for the last many years. I would say at least 20 years. A lot of VC money has been burnt. A lot of shareholder money has been burnt, especially by the likes of IBM. Uh, and for me, one of the signs that Google was going towards the way of IBM as a larger arc of history, right? So IBM used to be the dominant tech force and the research force for, I would say, at least 60 years in computing. And then they kind of lost the plot. Eventually, they kind of became too big. They became too bureaucratic, too corporate. They moved into consulting. And eventually, IBM kind of became like this, not a valid force in the world of computer science or computing in general. So Google, of course, started off as an amazing startup, a lot of research, a lot of they contributed to the internet at large, like how IBM contributed to the world of computing by inventing the fundamental computing building blocks like databases and stuff. Google contributed to the world of distributed systems, to the world of the internet. They made a lot of standards. They made like protocols possible. So Google has followed that arc. And when Google got into quantum computing, for me, it was a sign that they were becoming IBM, because quantum computing is a way to kind of fool shareholders and people who are investing in Google that something cool is coming up when nothing is coming up really. This is my cynical take on this. Of course, I don't mean to belittle all the research that has gone in. The research is actually meaningful. It is moving the needle in terms of physics, material science, a bunch of other areas which are relevant. But here is my main kind of skepticism of quantum computing, right? I actually wrote an article about this for my company blog. Maybe we can put it in the show notes, which is quantum computing, how I stopped worrying about the bomb or something like that, like a take on Dr. Strangelove, right? So the idea here is quantum computing can be used for 3 applications and only 3 applications right now, in a way in which it is better than classical computing. So one is it can break public key cryptography, the cryptography that we use in our browsers, in our mobile apps, in Bitcoin, in Ethereum. So the classic public key cryptography that we know will be broken by quantum computing. Second is it can, of course, simulate quantum computing and quantum worlds, quantum chemistry, physics, all the real world stuff that quantum mechanics represents. Quantum computers can simulate it much better, obviously. And the third one is not really a thing. It's like it can do some specific search operation in a faster way or whatever, but not fast enough that it matters. So fundamentally, these are only two things that it can do. One is break cryptography and simulate quantum chemistry. Now the question is, what do these incentives represent? So if you break public key cryptography, who benefits, right? So nobody who is actually there is no community of thieves trying to build quantum computing to make sure that they can snoop around the internet traffic. That's not a thing. So it's either mostly government agencies who want to snoop on other agencies or other countries or whatever, or people who want to access cryptocurrencies which are locked by public key cryptography. And the thing is, cryptography in Bitcoin and Ethereum can move to post-quantum standards very easily. It's just an algorithm that you have to change, and there is a bunch of complexity around it, but it's still not that hard. And then there is, what is the incentive for simulating quantum chemistry or quantum physics? I mean, if you look at AlphaFold and all these AI agents that are doing quantum simulation right now, or protein folding or whatever, they can do a good job already. So building this massive investment in material science and physics to make a computer whose only application can either be to solve cryptography, which can be taken away from it by moving to a different algorithm, or you can simulate physics or chemistry, which can be done by AI really well right now. So I don't see an incentive. I don't see an incentive to do other things. The people talk about quantum AI, quantum magic of other applications. They will say quantum computing will make mobile phones faster or whatever. Like some bullshit like that. That's all bullshit, by the way. There's no real algorithm that really does anything. So I basically contest the whole premise of quantum computing from the question of incentives. What sort of applications can be built, and who has the incentives to build those applications? And I do not see any. I do not see applications that are meaningful enough and worth enough that people will throw real money at the problem. Of course, this doesn't include people getting fooled. So you could be Rigetti Computing or D-Wave or some quantum computing startup, and you put all these papers and physicists in front of investors and say, you know what, we're going to do quantum AI. And then the investors will say, okay, here's $30 million, go do it, right? That will definitely go on for a while. I would say those are probably scammy, and those will probably get weeded out in the next many years. The question is, why would Google, IBM, and all these other more respectable players do it? My opinion is they are not as respectable as you think they are. They are trying to fool their shareholders, basically. So the Google announcement for the quantum chip, they wrote like this very flowery post about how they have a problem which quantum computers can solve in 5 minutes, but will take traditional computers like 1 million years or whatever. You know what that problem is? It's hilarious what the problem is. That problem is specifically designed for quantum computers to be good at. Basically, it says in a quantum circuit, if you randomly sample some inputs, what would be the outputs or something like that? Which specifically the problem is set in a quantum realm in some sense. Of course, the quantum computer is going to do better on that. It's kind of designed for it. And a classical computer will say, okay, sorry, we can't do this. But that's not a real problem. Nobody really wants it to be solved. It's not going to move the GDP of any country forward. It's a useless problem. So this is what I'm trying to say, that the incentives of who has the most to gain from a real working quantum computers is not there. So I would say Satoshi's Bitcoin, which is I think the more tricky one, will be the one interesting, because when Bitcoin moves to a post-quantum algorithm, everybody will have to give up their older keys and get the new keys because you change the cryptographic algorithm underneath. Will Satoshi come back to change his keys? I don't think so. So essentially what will happen is we have to say that, okay, Satoshi's coins are unspendable from 2045. And if Satoshi is there, please come and change your coins. Otherwise, we'll freeze those coins. That would be ironic, because it would be like stealing property from somebody who created that idea itself. Imagine if you were George Washington and you created the US on the fundamental law of property rights and stuff, and the US government decides to confiscate your own property, right? That would be bizarre, and that's what will happen probably. So I think that's the only, I would say, sticking point here, which is Satoshi's Bitcoin, specifically Satoshi's Bitcoin, not just Bitcoin in general. Satoshi's Bitcoins will be at risk if quantum computing becomes a reality, which is, I think, unlikely. And that'll be funny because it'll be tragic as well, because you will have to like come up with some idea of freezing those coins and moving to a post quantum algorithm or whatever, which are all standardized already, by the way. The post quantum algorithms are already kind of known. People have worked on it for a while. The systems are ready already. There's code bases already ready. So moving those to those systems will not be that hard. But what to do with Satoshi's coins will be hard. It will be a philosophical quandary. We don't know how it will play out. Ethereum will not have a problem. Solana will not have a problem. The rest of crypto will not have a problem, because they will say, you know what, from 2044, January 16th, we move to this algorithm. You give you 5 years, you come and change your keys. Otherwise, your coins are gone. And most people will be okay with that.
Right. So, I mean, that's interesting, but I wouldn't dismiss it offhand. So, by what you said, it sounds a lot like this nuclear fission nuclear fusion
Fusion.
power, right? For power. And that has been like a chimera that people have been chasing for like 50 years or something now, if not longer. So that has never happened. So this might go down that route, but at the same time, the current IT revolution, so to speak, didn't start off until people were given the opportunity to tinker, right? So they had to literally move the mainframes out of business basement somewhere, and give it into the hands of academics and students who could tinker around and figure
No, I think
some
I know. I think there is a bit of a different arc here. Actually, the arc is actually the invention of the transistor. So till you can think of it this way, right? We can make an analogy in a different way, which is the current crop of quantum computers are like vacuum tube computers from the 1930s and 40s. They are based on a different hardware, a different technology. I mean, the conceptual ideas are the same, the binary logic and all that is same, but the implementation is very primitive. And you can only do so much with it, because the glass will break, the air will not be pure or whatever. The fundamental limitations of physics and material science will always hamper you in a vacuum tube computer in some sense. Then the transistor gets invented. It's an entirely new way of doing binary digits. And the transistor fundamentally is amenable to shrinking as well. And then that kicks off a revolution where computers become smaller and smaller and smaller, and you can pack more and more and more, and you can have more computing in a larger data center, or you can have more computing in a smaller mobile phone. It all works perfectly fine. Then the Moore's law takes over, and life is very different. The question is, if we are in the quantum computing equivalent or vacuum tube equivalent of quantum computing right now, is there a transistor coming up sometime in the next 10 years, 20 years, 30 years? This part is unknown right now. Even if you look at the counterfactual in the world in the 1940s, there is no reason to expect that a transistor would be invented. Like the idea that germanium could be used to make that pure impure thingy and invent the PN junction is not guaranteed. There is no reason that had to happen. It happened. We are all lucky, thankful for it. But there is no arch which says, it was just about to happen and it just happened. That's not a real thing. I mean, we don't know that. And the fact here is, at this 2025 with quantum computing, the idea that there is this moment of physics and material science and magic that will happen, which will make quantum computers to a place where it can be scaled in a nice way that the traditional computer scaled, is unknown. And I think it needs a lot more work in terms of big labs investing a lot of like money and capital and people into it. For me, the problem is it would happen if there is incentive. For me, that's why I'm asking in my previous ramble, I spoke about incentives. What is the incentive to do this? Is there like a problem category that we can solve if this was a reality? And for me, the problem category seems very unappealing. And that's where I'm coming from.
All right. I don't know. I guess we'll see where that goes. But from what I've gathered so far, is this, it's probably like decades away from having any real world impact. So we can just ignore it for the next
No,
few years and circle.
when the Google quantum computing announcement happened, a lot of the quantum stocks went up. You saw that, right? So
So that went up and came down as well. So
yes.
there's a nice pump and dump that went on there. I think, but there were hardly like 3 or 4 stocks listed.
There are, I think, I would say around 4, maybe Rigetti Computing, Ionic, something, D-Wave. There's a few others, and I think Google and IBM, you could couple them along with the quantum stocks. They had a bit of a pop, but Do you know this Martin Shkreli, the guy who was
Yeah,
infamous for the insulin thing, right? He wrote a kind of a takedown of quantum computing stocks, which was very unexpected, I thought. Maybe we can link it in the show notes. It's kind of funny to read it.
right.
I guess Sham
Said
disconnected.
that regular scientists, right? They get the rest of the people when charlatans come to the scene, because what they say sounds probable, but the guys who can actually tell the difference are actually magicians. So because they know how the stage is managed. So I think Martin Shkreli's negative notes, I think, are far more interesting to read than his pops.
Exactly. I would agree with that. I would agree with that. He knows how the scams are run. So I guess the prison stint might have reformed him a little bit. So it might be fun to read it.
Yeah. So you mentioned DeSci. Like what is
So DeSci,
distributed sign?
yeah, decentralized science. Of course, everything is decentralized in crypto, right? So coming back to crypto from the quantum computing physics madness. So DeSci is this kind of thing that is going on for a while. It's not a new thing. It's been around for, like, I would say 4 or 5 years, or 3 4 years easily. The idea essentially is that scientific research is right now kind of cornered by an ecosystem of publications, journals, academia, research labs, and there is this process of getting grants, getting funding, doing an experiment, getting regulatory approval for the drugs or whatever it is that comes out. So there is a pipeline of how scientific research kind of goes through. And there are some people who believe that that pipeline is gatekeeper. There are gatekeepers on the pipeline, which is unfair. So they want to kind of open it up. And to open it up, the main thing which is missing is funding. Because if funding is there, then people will do random stuff. They will experiment, they will play with it. So how do you do funding? Crypto is a nice way to do kind of capital formation, so to speak. So what you do is you put a proposal on the internet somewhere saying that I have this token, and this token represents my research, the access to the proceeds of my research. And I am so and so. I have these credentials. I have written these articles on Reddit. You have no publications. You are not a scientist in some sense, right? Not the established sense. You're a scientist in a modern sense. You have enough cachet in this community to show that you are a real serious person. You have this token, and the token will accrue value if your research is real. And that's it. That's what it is. You basically say that anybody can be a scientist, anybody can do capital formation to advance science, and those tokens will have value. So some of those tokens are governed by like a decentralized organization. So you have somebody who is doing work on, say, erectile dysfunction. You have somebody doing work on hair loss for bald people. You have somebody doing work on longevity on Ozempic competitors, on lifestyle hacks, on drug formation, on AI agents trying to find bugs in established research, trying to reproduce work or whatever. Think of anything scientific, so to speak, and think of that procedure being funded by a token-based crypto economy. That is decentralized science. Now, this is actually interesting because you could argue that academia is overfunded and bloated and inefficient. And if academia is bloated, overfunded, and inefficient, is there a way to disrupt that particular way of doing things? And decentralized science says that there is a way to disrupt that, and we will do it. Of course, the same complaints apply. What if the person who has the token and who controls the research says, fuck you guys, I will not pay you any money, whatever, it's gone. Can you enforce that in a court of law? You cannot right now. So all of this is still based on the crypto vibes, goodwill, non-enforceable, non-regulated, the crypto world, right? But if you look at DeFi, where the things that are being interacted with are fully on chain, like these decentralized assets are on chain, right? You can have the tokens fully represent what they are on chain. Research work doing a drug discovery is not on chain. It's in a physical lab somewhere. So as long as the person is honest, it works. Otherwise, it doesn't work. So this is the community now. There is a bunch of excitement around it because some crypto influencers have been talking about it a lot. Notably, the founder of Binance, CZ, or CZ as he's called. So CZ kind of went on a DeSci. Basically, he said some positive things about it, and that became a big deal. Uh, Again, it's still, I would call it like a small corner of the crypto ecosystem. But I think it's interesting. It's interesting because it actually talks about the notion of crypto as capital formation, uh, like a capital formation vehicle. So you can do capital formation for all sorts of ventures, and science is one of them.
Right. I mean, before the government takeover of science funding, right? Most of this was kind of funded by aristocrats who would patronize a bunch of scientists doing some random stuff. So I think what you describe kind of is similar to that. So with your if you're like a guy sitting in India trying to do something, you might find some patron in Estonia who would probably fund your thing to a certain extent, see how far it goes. But
Yeah. So one of the examples here would be, you can look at this token called Mira, Mira. So what happened was, there is this scientist who's a legit scientist in the traditional sense, right? He works for, I think, some lab in Netherlands or somewhere. His daughter, whose name is Mira, incidentally, had some sort of a disease which is rare, and there's not much work done on that disease. So he made a Twitter post asking for donations and stuff in a classic way, go to GoFundMe and give me some money and stuff like that, right? But somebody said, you know what, you are a legit guy, you can do the work on this. So I will create a DeSci coin for you called Dollar Mira, and I will float it on Binance and a bunch of exchanges and whatever. And if they buy it, you get the money and you can work on the research on it. And you control the supply. Here is your public address or whatever. That coin went up to, like, I think, 60 million or 70 million dollars in market cap or something like that. And he was able to sell it. He told everybody that he's going to sell it because he wants the real money to work on the problem. He's not going to just hold some meaningless token in his wallet, right? He needs real money to fund a real lab and do some real work. So he told them that he's going to sell it immediately. And people said, that's fine, you sell it, that's okay. So he launched a coin, or somebody else launched it for him. It went up quite a bit, and then he sold it, and he made, I think, 20-30 million dollars out of it. And he said he's going to use that for funding the research on this disease. If it works, who am I to complain, right? There are people who voluntarily bought the coin knowing exactly what he will do, and if he does it, all power to everybody.
Right. So it's one of the rare cases where crypto actually had a use case, like a positive outcome.
No, I have a colleague at work. His name is Jake Lynch. He's like a true believer in this idea that crypto is a way of capital formation in the 21st century, or whatever you want to call it, right? Like right now, capital formation is gated by a lot of gatekeepers. But capital itself is not. Capital is kind of free flowing everywhere. So you should be able to form vehicles of capital to fund whatever you want. It could be art, it could be memes, it could be science, it could be government, it could be anything really. And capital formation should not be controlled by gatekeepers. This whole condescending / patronizing attitude about you guys don't know what you're doing is bad. So if you think capital formation is the kind of main applications of crypto, there is something there. I think it's not fully hollow.
And absolutely. So yeah, I think finally, after going through like 2 cycles of just memes and monkey JPEGs and so on and so forth, we are finally seeing some interesting use cases come out rather than just pure speculation. And I'm sure, like, even now, 90% of what happens is just pure speculation, but at least 10% of the people are actually focused on delivering something, positive EV to the world. So that's good. So with that, I think we'll wrap up this month's Cryptonite.
Sounds great. Next month we'll have more interesting things. Trump coming into power and some deregulation happening is definitely worth looking forward to. Let's see what happens.
All right. Cheers.
Cheers, guys. Have a great month.